Welcome to the Financial Armor Show. My name is Brad Cooper, the president of Cooper Financial Investments, and I want to welcome my co-host, Jaclyn. How are you doing today?
I'm so good now that I get to spend time with you, Brad.
Well, thank you. But I really now know the true reason why you and our special guest, which I'm going to introduce here shortly, have a big smile on your face.
I think it's because we're 6 days and counting until we get sunshine.
That's right. And you told me you're getting rain and snow and all this
Mhm.
nasty weather. So,
Yeah, I know.
wow.
Minnesota is so fun this time of year. You don't know if we're gonna get the 80-degree sunny day or if we're gonna have the 30-degree snowy day, or even negatives. You never know at this
That's
point. So roll the dice and find out, or come visit, Brad.
Well, and speaking of visit, I will be up there in a couple weeks, speaking at a special event that Gradient's hosting, and I think our special guest may be in attendance, and maybe and hopefully speaking at that as well. But before we get to all that, I am so excited, Jaclyn. Looking forward to this call and our special guest today, which I know you have the privilege and honor more so than I of visiting with her because she's in your office, and you work with all these other advisors, but to have a special guest on like today, and then it even gets better. The two of you are flying into Arizona next Wednesday and going to be at our special event, which our guest is going to be the keynote speaker, and
Mhm.
everyone's looking forward to that. So, but without further ado, I don't want to, eat up too much time of this show. But I want to introduce our special guest, Jaclyn, and you could probably help me out as well. I've known Lisa Schreiber for many years now. Lisa is, in my definition, she may have a different title, but she's a portfolio money manager. She's the brains behind the portfolios that help create these portfolios that myself personally and our clients invest in, and has done an amazing job over the years. And in addition to that, Lisa's going to be coming in and speaking next Thursday at our event, which we'll give information here shortly on that. But Lisa, I know you have a amazing background, and I haven't met, probably a smarter young lady than you, and
I can
where you're at and what you do and the money that you have made our clients in the last years makes my job a lot easier. So thank you, Lisa, for taking the time out of your busy schedule, especially with everything going on in the markets,
imagine.
right?
Exactly. There's not a shortage of things that we have to look at the moment. But yeah, thank you for having me. I'm certainly looking very forward to coming to Arizona next week, not only to get a little bit of a reprieve from the cold in Minnesota, but also to
Yes.
meet all of your lovely clients. I mean, I can only imagine if your clients are half as nice and great as you are. I know I will be in for a great conversation. So I can't wait to meet all of your clients next week and speak to them.
Well, thank you. You're so kind, and so let's just dive in. But before we do that, let me just give our listeners, some information about the event. Then we'll remind everyone at the end of the show. But mark your calendar, Thursday, April 9th. Thursday, April 9th, from 8:30 in the morning till 11:30 in the morning. We're going to start out with a delicious hot buffet breakfast, which I'm excited about. And then we're going to have three lady expert speakers, Lisa being our keynote speaker. And event is free for the public, for our clients, for the public. And if you want to register, we still have some seats available. You can go to cooperevent.com, cooperevent.com, and sign up for this event. Again, this is open to the public, and I can promise you, you're going to get so much information and knowledge on different topics when it comes to, money and also women as well. So I wanted to plug that. But as we get started, Lisa,
Mhm.
what's going on in the markets? Why is the market? I know it's not your fault personally, it's Jaclyn's,
Yeah,
but
I know.
why are the markets down? What's going on that the media is painting a picture of gloom and doom? And of course, the world's coming to an end again, right? You hear that.
Absolutely.
you're on TV very often, several times a week, several times a month, and you hear the same thing. But kind of give our listeners an update on what you're seeing behind, your role as a money manager, and why we're experiencing what we're experiencing.
Yeah, sure. I mean, there's, as I said before, there's no shortage of headlines, and as you said, right, there's always concerns out there. I mean, it's our human nature to begin with, right? But at the moment, I mean, we hear a lot about coming into the year. We heard a lot about AI, right? What's going on
Right.
there? Then we had some more news on tariffs. Yeah, unfortunately, that is not resolved yet either. And then all of that got a backseat over the last couple of weeks by end of February when we heard about the escalations of the tensions in the Middle East and the Iran war with the US and Israel together. So certainly that drives markets the most at the moment, and that is changing all day, every day. But I think when we hear a lot about that and high energy prices and all the concerns that we are seeing in the markets and what economic and market impact that has, I always say, okay, take a deep breath. It's always, yep, looks bad, but when we take actually a deep breath and zoom out a little bit and look from a little high level view, then we see, okay, year to date, the market, the S&P is down a little bit, around 4%, right?
Right.
And we saw some greater volatility also when it comes to AI stocks, tech, for example. You know what kind of drove the bus over the last couple of years? All of a sudden,
Right.
zero rotation there, right? It's not working what worked the last couple of years. But again, markets are up over 16% still for the year. Then
Wow.
we had great years, right? 2023, 2024, and 2025, all great years of returns. And this is kind of a little bit of a setback that we have right now, but nothing too concerning, and certainly nothing what the media wants to portray, right? That the world is
Yes.
coming to an end. And I know it can be terrifying. But again, when we zoom out a little bit, we have corrections every single year, right? I mean, I
Right.
just said it. We have great years. We had 26% in a S&P in 23, another 24 in 24, and another 18 nearly last year. But in all of those years, we had a sharper correction during that year, right? What we saw,
Right.
I mean, I think in the recent history, when we look back, and actually today is a very special day. Today is April 2nd when we record this podcast. It's at the first year anniversary since Liberation Day last year.
That's right.
Right. And we know what happened last year at this time. It was kind of a wild ride from markets up from that very point, right?
Yeah.
Markets were down nearly 20%. And what did happen by then? Markets closed the year out nearly
Yes.
18% up. So with all of the uncertainty that's going on and all of the concerns, I was like, okay, if you're diversified, then you probably do not see that much of an impact to begin with. And there's areas in the market that haven't worked over the last years. Small caps, for example, international developed, right? There's multiple areas that work well and something that does not at the moment. But I think overall, when we see the big picture, it's still very positive, because what we always saying, and we are not getting tired of saying, that what drives markets in the long run or over time, it's
Right.
the economic growth, economic resilience, and earnings growth, how our business is actually doing in this environment. And both of that background, looks very, very healthy still.
That's so good to hear. And I was just reflecting. I was sharing before the call today that being in the investment world, we have to go through audits on a regular basis, which are very good. And I was sharing this with them. They were talking about, when you're sitting down with a client, let's talk about risk, they said to me. And that was so easy. I said, you know what, my almost 33 years in this industry, I've never worked with a team of portfolio money managers, which is Gradient Investments, that understand risk. They understand, the fiduciary responsibility that we have. And in addition to portfolios, we use some insurance products too to offset a little bit of risk. And Lisa, what you said is so true. Yeah, the markets may be down 4 or 5% year to date, but most of our clients are not down because of the way we have things allocated. And I told the auditors, I said, if you want to know what keeps Brad Cooper up at night, is if I had my clients' money, say they're 75 years old, all in the stock market in moderate to aggressive risk stocks and bonds, and the market dropped 40%,
Mhm.
that would keep me up. But that's not the case. And so, with what's going on, what you just shared, kind of share your forecast and what you're seeing and your team in the outlook the next maybe 12, 24, 36 months.
Yeah, certainly. I mean, at the moment, the Iran Middle East war is still an overhang for the markets and for the economy. So that's certainly what it is at the moment. I think the thing is, and we saw that in the markets the last couple of days, and it looks like the market is taking it day by day, right? Yesterday, for
Right.
example, April 1st was a fantastic day, the best day since last year, May of 2025, right?
Was that an April Fool's joke?
There was it seems so, yeah, reverse the next day today.
You're right.
But again, it's kind of taking it day by day,
Right.
depending on what the peace talks are doing and what Iran, the developments there. But I think again, in the long term, like I said before, what will be more important where it's going is how resilient is the US economy? What are we doing there, right? What is the labor market doing? Inflation,
Right.
overall economic growth, and how are US businesses dealing with all of that, right? US
That's right.
corporate earnings growth. And coming into the year of 2026, that is projected to be very much higher than long-term averages, which is fantastic, right?
That's
US
awesome.
businesses are healthy, are thriving, and that despite all of the tariff stuff that is still going on, right, since last year. So that creates uncertainty for businesses also with their supply chains and all of that. But it's still projected that they're going through this very well and coming out strong on the other side. And I think it's also important with the economy because we hear a lot about Iran specifically having economic impact because of the cost of oil and energy, right? I mean, we heard
Exactly.
20% of the daily global oil goes through a very narrow sea street by Iran that is basically factually closed at the moment, depending on negotiations of what's going on there. That is a huge amount that's missing every day. And that drives up prices of oil over $100. I think all of us have felt that at the gas pump
Oh,
already.
yes.
The interesting thing is why so many people are talking about that when it comes to okay, what's going on the next couple of months is how it also feeds into inflation, not only from the energy perspective, but also from okay, it increases the cost of everything, right? Oil flows into every single thing that we use every day, even food, right? That needs to be fertilized, it needs to be harvested, it needs to get to the consumer. So that's why the price of oil overall and the direction we are going there is so important or so much talked about at the moment. So I would say we will probably see an inflationary impact from that. That goes usually very fast. But I think overall, over the long term, that we are still, again, when it's resolved, which now seems to be quicker rather than later, or at least we see some developments there, that it goes back to normal within a couple of months. And then again, the market can focus back on earnings growth and the economic strength of the US, which is still very, very healthy backdrop. At least we're starting from a very healthy basis at the
Right.
moment.
You know, that's good. When you're talking about oil, I just gassed up my vehicle, which requires premium,
Mhm.
higher
Yep,
octane,
me
six
too.
$6 a gallon.
Yeah,
And
exactly.
the impact that has to have on Americans and inflation, which
Yep.
you talked about. So you did mention inflation. I just want to get your, feedback because, you know, I talk a lot about interest rates and the housing market. So with inflation maybe being an issue,
Mhm.
hopefully short term and then leveled out. Where do you see interest rates going? Because the Feds did not lower rates this go around. Do you see still the projection, the forecast over the next maybe 12, 24 months of a few more rate decreases?
Mhm. So, which is interesting. It's such an important point because coming into the year of 2026, markets were pricing in a good two interest rate cuts this
Right.
year, and we also have a Fed chair change in May, right? That also
Yes.
increases the questions of what how the new Fed chair might think of things, right? So we came from about 2 to 3 interest rate cuts expectations to now zero within basically a couple of weeks. because of higher oil price and because of how that would impact the economic outlook. By now, I would say it's certainly prudent that they are staying on pause right now and seeing how that flows into, because we haven't seen actual inflation reports since the war broke out. We probably see some impacts very soon and very quick. So I think it's prudent that they stay on pause at the moment. There is whispers out there already that we might see at the end of the day, depending on how long it takes, maybe a raise. Right? No one was having that on their
You're
bingo card
right.
a couple of weeks ago. So we came from 2 to 3 cuts to none, potentially a raise until the end of the year, and obviously that affects yields, that affects mortgage rates, like you said, right?
Right.
Staying elevated. That also impacts the markets, right? Because the market usually does like lower rates because all the funding on all the loans for businesses gets cheaper and all of that. So I don't think we will have a cut this year. I'm
Okay.
not so sure about the raise, but I think it all depends on how long this conflict will last. And even Fed Chair Powell said, okay, the actual economic impacts we do not know yet, because it really depends
Right.
on how long does it last and how long will it take to go back to normal once we have everything opened again and oil flowing again in every corner of this world, and we kind of think back of going back to normalization. So it's still a little uncertain at the moment. But I would say the Fed probably does a great job of staying put at the moment.
So let me just share with you my opinion and tell me if you agree with it or
Mhm.
not. Coming this November, like every 2 years, we have an election, right?
Mhm.
Now, Donald Trump is the president, whether you love him or hate him, it doesn't matter. He is a business person. And my thinking is, I had this discussion with some clients the other day, is he's going to do everything in his power to end things with Iran, to improve oil, improve the economy, because the more favorable the economy is going into election, the better the results for that party that's currently in. Am I thinking right?
You're thinking totally right, right? And when you think of election years, no matter if it's a presidential election or midterms elections, what we
Right,
see this year, these years are generally at least a couple of months leading into the election, and which is in November, are a little bit more volatile for
right,
markets, right? And we haven't heard a whole lot about it now. I mean, it's ramping up, and we hear more about now. Okay, how can the House turn out red or blue majority and all of that? So it's ramping up the talks about
right.
that. But again, that the conflict is more overboarding a topic at the moment still. But these years where there's election happening are tend to be a little bit more volatile. And why is that? Again, it's different policy suggestions what might happen if it's a split
Right.
Washington or not. Might different things not go through as much anymore when there's a split, or will it be again for one party or for the other? Different policy stuff. But I'll tell you that much, because there's so much talks about if it will be split or not. I mean, the
Right.
markets actually tend to love when there's
When
a
they're
split
split.
Washington.
Right.
And why is that? Because nothing gets done, you know?
Ex-
Nothing gets done, and the markets love that, because then the economy can do its thing. Businesses can do their thing without Washington interfering too much, and that's exactly what the market wants to focus on. So actually, interesting fun caveat. If we have a split Washington up from November, that's not the worst thing for the
you
market.
know, well, that's encouraging. So, well, let's take a couple minutes. Well, time flies, doesn't it, Jaclyn? When
Yes.
we have, and are we on a roll or what? We've had some of the best guests the last several weeks, which I'm so thankful, very humble as well. But I specifically just want to touch on, not specifics, but here's the good part. Next week at our event, Lisa is going to be hanging around and answering more detailed questions, which, if you're listening to this podcast, which I know we have a lot that do, that's a big deal. I've
Mhm.
been in this industry going on 33 years, and up until my relationship with grading about 10 years ago, I never could call any of our portfolio managers or analysts. So But with that said, there's a couple portfolios that we're using that you're recommending for us advisors to recommend to our clients. And personally, Brad Cooper and my wife, Shelly, have money in those as well. So let's just touch on, especially with the volatility in the market, and maybe if we continue to see that for the next several months, let's talk about our buffered portfolios just for a second, and maybe give our listeners what I like to call, which most young people don't understand, a Reader's Digest version of that portfolio. Then the second one we'll get to thereafter, since we're right in the middle of tax season, is a wonderful tax advantage portfolio that is saving our clients so much money in taxes.
Yep.
So let's start with the buffered, if you don't mind.
Yeah. And you just mentioned portfolios that I'm going to talk about, which I'm very love to talk about because I manage both the buffered outcomes ETFs portfolio and the structured notes. So that is one of my favorites. Obviously, I'm a little bit biased, but you know.
Well, me too, because Lisa, you have saved me a lot of money from loss, but you made me a lot of money when the market's been good. So thank you for funding my retirement even better than most.
Then I'm doing my job. It's my job. No, but you mentioned that especially now in this volatility, right? What can we do? And when we talk about volatility, usually it's seen in a negative light, right? And I would say, okay, when you're not diversified and when you look at your portfolio and there's volatile, it takes a lot of bravery to just, stick through it and come out strong on the other end. But I think volatility also creates a lot of opportunities.
Right.
First, when you diversify, there's other areas of the markets that you probably invested in that work. And on the other side, it also creates opportunities for us, especially in the buffered products, because and we just got our new offerings for our single structured notes out there this week.
Great.
And we see so much better terms because of the volatility, because volatility is an indicator and a huge part of how we get the terms right, basically. So we get better terms. It helps our clients protect themselves even better and kind of lock in some more favorable terms. And what it is, at the end of the day, our buffered ETF portfolio, for example, it just gives you a way to protect yourself to the downside to whatever degree, while you're capping yourself a little bit for the upside, right? So it's always a risk and reward. So for the protection to the downside, you say, okay, I want to be protected to the downside for 10, 15, 20%. If the market goes down, I am not, because I am still, within the protection zone. But that means, and that's the other side of the coin, I have to give a little bit to the upside, up to being able to protect myself. But usually that's very favorable over a long time. And as you said, that's available in one portfolio where we do all the work and choose all the ETFs and terms that go into it. Or as you always are a user for that for your clients in the single note, where you can really determine, okay, how much downside do I want to take and how much upside do I want to still participate in. And that really is such a great tool to being able to smooth out the ride for clients, right? And just keep them invested and just still participate to the upside. So that's just a fantastic in these times specifically to have something that protects us a little bit off the volatility.
Absolutely. And Lisa's going to get in detail a little bit more when she comes in next week. But I just had this conversation the other day with a prospect. I said, never in my 30+ year career did I ever think I would be given a benefit of a portfolio invested in the market that has downside protection. And with the terms, coming out better, I am so excited about that. So that's one. And I'm finding, Lisa, that a lot of the industry that I interact with outside us is not offering that.
Mm-hmm.
And that's something you definitely want to learn more about. But let's touch on the tax advantage portfolio briefly, because that is just brilliant. And I know last year when that came out around this time, with the losses in the market and the gain, boy, the timing could not have been better for tax savings.
Definitely. So it was a new portfolio. So we welcomed it into our portfolio family beginning of last year of 2025. And
Right.
then we had some great opportunities to manage it how it's supposed to be in a tax efficient way when we had Liberation Day, as we said in April, where the markets had a larger tantrum, right? It resolved itself at the end of the day. But during times where there is higher volatility, and at the moment it's the same thing, right? There's higher volatility, which again gives us more opportunities to tax loss harvest. And that's a weird word,
Yes.
but that helps our clients collecting losses from that volatility while still investing fully in the market, staying invested in the market, staying invested to the risk profile and risk allocation they are choosing, never being out of the market, but collecting losses on the side that they can use for other gains to offset in a tax efficient way and helping us, um, uh, saving taxes, which is great.
Right.
And helping us just more favoring long term capital gains in short of in uh, compared to short term. So there's a lot what we can do for non-qualified money, we call it, right? Taxable money, that we can manage it in a tax efficient way. And that's again another, you know, benefit at the moment from higher volatility that I talked about.
Right.
Another positive, if we spin it that way, is okay, it gives us a lot of opportunities right now to being really cognizant of helping our clients save money and save taxes at the end of the day. And these times, higher volatility times, are great for us managing their portfolio in that way.
Yes. So I love that portfolio. Just to sum it up, how simple it is. You can have your money in the market, non-qualified, non-IRA money. The market does great in a year. And when you get that 1099 this time of year, because of the tax advantage portfolio, it's going to look pretty good compared to other portfolios. And what it's going to do is save you money in taxes. And that's brilliant. So, wow, time goes by so fast. As we're wrapping up, I just want to promote, Jaclyn, again, the upcoming event. It's called Empowering Women, Wealth, and Wellness. Even though it's titled that, we're encouraging all husbands, if you're married, or significant others to attend this event. We have 3 guest speakers, which you just listened to one and got a small taste of what you're going to hear next week. But secondly, we have another speaker who's in Minnesota that's going to be flying in. Caitlin, we had her on, Jaclyn, as a guest here a week ago. She's going to talk about our new technology platform that we're rolling out, which in my opinion is one of the best in the industry. And then our third speaker, which is a very important topic. As we all age, you two ladies are very young, but when you get to be my age and older, and working with clients that maybe are in their 70s and 80s, they're going to be facing long-term care, assisted living care, healthcare issues. So the third speaker is going to be addressing that head on. And the whole theme of this is how to empower women with more wisdom and knowledge and be proactive. I know we have all read several studies, and Lisa, you may get into this next week a little bit, is, statistic-wise, they say us husbands will die first, which is going to leave a large amount of wealth to our wives or spouses. And at that point, what decisions can you make with that money? Do you have the information? Do you have the knowledge? And we're wanting to prepare women for that in the future if that does happen. So again, that's Thursday, April 9th. 8:30 a.m. to 11:30 a.m. It's a free event. We're starting out with breakfast at 8:30. Then we're going to jump right in with 3 topics, 3 guest speakers, and then we will have tables with all the information and resources from all the speakers that morning that you'll get to take home with you. So again, cooperevent.com, cooperevent.com, or you can call our office directly, toll free, 888-390-5277.
Well, thank you, Brad. And as much as I didn't really get to say a lot today because Lisa stole the show from me, but no, I mean, you did fantastic, Lisa, and sharing that insight is great for our listeners. And to our listeners and viewers, I highly recommend going out and watching those last 2 episodes that we did with the other speakers. And come with questions. Come to this event
Yes.
with questions from the videos or from the podcasts. And please also subscribe and be notified. Ask these questions so we know how to help you as clients and as listeners and viewers. And we appreciate you watching. And that does it for this episode of Financial Armor with our host, Brad Cooper.
Thank you, Jaclyn.